Well, as the dust settled on Monday's grain and oilseed trade and livestock trade, mostly positive day, but some underlying potential issues could be there that we need to keep our eyes on. And as we take a look at the market trade after Monday's session, we welcome in our good friend John Heinberg with Total Farm Marketing joining us. John, good to catch up with you, sir. Hope you had a good weekend and enjoyed some of the football festivities and whatnot over the weekend, John.
Yeah, I got to see at least the second half of the game again. Just congratulations to those Chief fans out there. They've got a good one there, Mr. Mahomes, and definitely made the game very interesting. It was a good ball game between the two clubs, at least the parts I saw.
I always like it when the game is actually good, and honestly, it made up for some of the commercials I don't think were that great this year. So, anyway, I digress. Still a fun Sunday to watch a little bit of football and then come back in here Monday. And most people probably call for a national holiday on the Monday after the Super Bowl. We don't got that. We have markets open. And, we started off a little bit weaker, but generally, all said and done, positive day. Although I know we did come off some session highs across the grains. John, what stood out to you? Biggest maybe storyline or two on Monday's grain trade?
Well, let's just go right to the soybean market because that's the one that seems to have the most storylines in it. We had a very good overnight session and we kind of faded back to negative territory, did climb back, at least got some positive gains at the end of the day, but still well off those highs. And, biggest thing I'm watching right now, too, is what's going on with the export window. We had export inspections today, 1.55 million metric tons. That was a solid number, but it was our 5-week low. And you go look at the historical charts in terms of export inspections, we drop off pretty quickly from now until the end of May. So we're watching our export window possibly close in this time frame with those fresh South American supplies starting to come online. Obviously the Brazilian beans are going to outweigh the losses in Argentina. So that's a little concerning. The other thing I'm kind of watching within the trade is what's going on with the bull spreads, the old crop versus new crop spreads. Despite the strength in the market in general today, those all gave back money today, taking a little bit of that premium out of the market. That's a sign, too, that maybe demand is starting to wind down a little bit here. So that's something we'll have to keep an eye on. A lot of those spread charts, they got some topping action in them. They tried to break out a little bit today, failed on those, put another reversal in. So it might be a window here where we watch those spreads tighten up a little bit. Because obviously our bean supplies are tight. We need acres. That's going to support that new crop supply. But then at the front end, we got this heavy harvest coming in from Brazil, which is still well behind. I saw numbers today, 17% complete versus about 24% average. But those beans are starting to move, and that's the biggest thing. And that's just going to, make it hard for prices to really maintain some rallies here unless we get some positive news on the demand front that we haven't seen for a while. The last old crop bean sale was the 25th of January. That was reported, so there's still some things that we got to get done in that bean market here, but a little concerned watching those spreads today.
Yeah, I was noticing that spread activity as well. I know bean meal, I believe we went up and got another contract high before we backed off at March. Beans as well rallied to the highest level since I think mid-June, and the highest level for a lead contract since mid-September. But still, to your point, I'm also a little concerned there. Just watching everything, South American crop coming online. I'll be watching too to see how much logistically Brazil could move maybe south to Argentina on the Paraná River to help with crushing down there with the lack of beans in Argentina. But that feels like maybe a bit of a secondary story to the things you mentioned, John.
And I'm saying we're going to fall out of bed here anytime soon. I mean, our demand is still good on the domestic front, and our supplies are still tight, but might be just in a window where it might be the spreads that do a little bit of the work here. We said today we're 2 higher on the old crop, 6 higher on the new. So we still saw some value come into the market. But it might be just one of those windows. Like I said, we might continue to see that premium between the old and new tighten up a little here. Now, if we do get some negative news, we get cancellations of sales to China or something along those lines, which this market would react pretty aggressively. And we still got a pretty big premium over those South American beans. But it sounds like, at least through some of the sources I look at, that the premium, the basis levels or the premium levels down in Brazil are coming down with the new supplies coming on board. It's real hard to maintain a rally when your number one competitor's prices are going lower.
Very true. Let's move over to the wheat markets. Fairly solid day there. We came off the overnight lows and backed off the highs a little bit. I know we got more increased heavy fighting Russia, Ukraine. That's an issue that seems to be coming back more onto traders' minds. Maybe we're building in a little bit of a premium there. Throw on top of that, all these spy balloons and unidentified objects being shot down. That's adding to tensions with the US and China. And I feel like wheat markets, especially, maybe not, not so much US, China as a player there, but wheat markets seem to be affected the most, I think, by global events and global tensions. Would you agree with that, John?
I agree totally. I mean, it is a more of a global crop in terms of somebody out there is producing or harvesting wheat on a daily basis in different
Mhm.
regions. And realistically, this morning, with the wheat futures being down, we had nothing but kind of negative news in front of the market. First off, we're picking up moisture across the U.S. You look at the 6 to 10 day forecast, above average precip, pretty much the entire country. So that should help out the winter wheat crop a little bit here in this window, and not probably everybody, but some will get some boost out of that. Then on top of that, Brazil's got a record crop for wheat coming into harvest fairly soon. You got Australia with a record crop for wheat coming up to harvest. That's just going to put pressure on global prices as those supplies continue to increase. So that was kind of the news that started the day. But then we're looking at the technical side here. We had a nice move on Friday, fought through those lows today, got some more money flow today to move us a little bit higher as well. One thing that's kind of interesting right now, and we're missing those commitment of trader reports. We didn't get last Friday's and the Friday prior due to that ransomware attack on the firm that puts the numbers together. And we still don't have any clarity when we're going to get those numbers. But right now, the funds were short the wheat market, and they could be easily moving out of those shorts. And we really don't know, other than just what the best educated guesses are in
Mhm.
that regard. So that money flow thing, I think, is a big part of this. Then we can move the wheat market up. We got some resistance around that 100-day moving average around 810. That's on that March contract for Chicago. And that might be an area that we go challenge here. And there's a trend line running through there. So it just feels like we'll see what happens when we get to that point, based on just some short covering and some money flow that I think spilled over and helped out the corn market today as well.
With those CFTC reports, real quick, should we be prepared for volatility one way or another, depending on when we get those reports back and what they show us, John?
It's hard to gauge. Again, obviously, where the money has been moving, the way the prices are moving, we would assume that they're getting longer in the corn market, they're
Mhm.
getting longer in the wheat market, tightening that up a little bit, maybe losing a little bit of their strength in that soybean market, with the exception of just the last couple of days here. So it's hard to gauge. Now, if we come back and we get a big surprise and they really moved out of something, that could cause a bit of a trigger. But those reports are key, and that, they're going to be key going into some of the livestock sectors, which we'll talk about in a moment too, in terms of just where that money flow is in some of these markets.
You mentioned corn. I want to touch on corn as well here, real quick, a little bit more. I would agree with you. It felt like corn was kind of just a follower on the day Monday. Not a lot of fresh news there. Still staying fairly choppy, fairly range bound here. That March contract up near the areas of resistance at 685, 690 mark, John.
Yeah, we had a nice little follow through though in that market today. We had a really good day on Friday, big outside day, turning finishing on the top end of the range. So a little bit more buying came in and kind of pushed it through the next level. Maybe we got some more resistance a little bit above here. Now we are hitting the demand window where corn is picking up here in terms of the export sales, as well as the export inspections. Now the inspection numbers today were just kind of so-so. They were middle of the pack. And we're still lacking where we need to be. So that's the concerning point. And none of those bushels went to China. So that's another thing the market probably didn't like, but we're still watching that, this being a window where we can see that kind of grow here. And then we need to, otherwise we're going to go into that March report probably a little more cautious than bullish, just because we think the USDA can make that export demand adjustment that everybody's kind of waiting for to show up if we don't see these export sales and shipments pick up in the next few weeks.
We're talking markets today here on Market Talk with John Heinberg of Total Farm Marketing. John, let's move over to the livestock trade. Fairly robust day, cattle and hogs. I know in the case of hogs, I'll start there. That front month February contract goes off the board Tuesday, hanging pretty close to the cash index, but really saw good strength in the deferreds, triple digit strength to the upside. And that April contract is about $12 over the cash index right now. That's going to be for me, that's going to be interesting to watch how that works together when we see February go off the board.
Agreed. I'm kind of watching that as well. It was a really nice move today. Now there's another one of the markets. The funds are actually pushing to a short position a couple of weeks ago in hogs, and don't maintain those very long in the livestock sector on a typically basis. But sometimes they'll hold them if they need to. So I'm kind of watching with that when we do get that report, what's happening to the money flow there. We've had some very volatile days last week, and finally put a little bit of a turn in on the end of the week. Took out last week's highs today. I thought that was very, very key in terms of the technical picture. So we'll see. We got some pretty good resistance around this 87 area. We struggled there a couple weeks ago, so we'll have to see if we can kind of hold through this. The only two things I am seeing that's encouraging. First off, the cash index has been trending higher basically since mid-January. It's not an aggressive move, but it's going higher. And so maybe we've got our cash bottom in. Even looking at the direct trade's been slowly ticking higher here as well. Finally got it in line with where the February contract is. And again, that premium of April over top does have me a little bit nervous here. So we'll have to watch how the market handles that. As long as we continue to see some movement, I think, in the vertical side on that cash market, that might still allow that April contract to maybe move out and really hit some good resistance on top. It might be kind of a limiting space unless the cash market really can kick in. And we did have a few other things out there today, too. Obviously, we're seeing some movement in Chinese hog prices to the upside, so that might brought some spillover strength into the hog market today. There was a whisper article out there on the social media of some African swine fever showing up in Hong Kong, in that region, which is just off the Chinese border. So maybe with the market being as short as it was, we threw a little risk premium in today just in case something comes out of that. I don't expect that to be anything at this time frame, but at least enough, like we get a random mad cow disease case somewhere here or there. The disease is here. It's never going to go away. It's going to be out there somewhere, and it's just a matter if it flares up and becomes an issue.
Yeah, that Hong Kong, I saw that storyline as well. Something to monitor, I think, but doesn't feel like it's going to be a big hog market mover here anytime soon. Cattle trade, looking at last week's negotiated cash trade, a little over 108,000 head. Sounds like about 75% of that was nearby delivery. The remaining was committed for deferred. We saw a cash trade, the North was $4 higher last week. I get the sense we're not going to jump that high this week, but I have to think we're at least going to be steady as we continue to watch how this cash cattle market is continuing to kind of trade the last couple of weeks here, John.
I think that's going to be the driver in the cattle market overall is going to be the cash trade. And, just talking to a couple producers today, they were getting phone calls on Friday from multiple packers kind of looking to find some cattle. So there's some concern out there from their side that the supply sides are tightening up here. So there's a little bit of an extra push, I think, especially too, a little talk of I know we're forecasted for a storm later in the week coming through the Southern Plains, swinging through our area. We'll have to watch that. So maybe there's a little urgency to get some cattle locked in and moving, before that comes through. So we'll have to really kind of keep a focus on the weather, especially this time of year. But again, right now, the other side I liked is two choice carcasses. We're about $4.50 higher on the week last week. So we're seeing a little premium, maybe move back into that choice beef. That gives the packers a little bit more meat on the bone to bid up for a tighter supply. That's still going to be, I think, as I said, the driver in the market will be the cash market. If we continue to see some uptrend, there's going to be room for the futures market to keep moving. Now, keep a close eye on historical windows here. Now, we're usually around the Valentine's Day area. Actually, about the 15th of February, we typically peak out the April contract and for a winter high. Again, that's on the historical seasonal window. Obviously, the cash market can trump that and push things higher. But again, it's just a spot in here. If the funds are a little bit long, which we really don't know, but I have a feeling they got some pretty good length in this market, that maybe they start peeling back some positions. Still not calling for a washout by any stretch of the imagination, because if as soon as prices get cheap, I think it's an opportunity for people to step in and be an owner in a market that's got a really tight supply well into next year.
And I know we saw some new contract highs made in live cattle on Monday, but then to your point, I feel like I'm with you. It just feels like cash is going to have to be the driver here of the futures trade for at least the next couple of weeks ahead as we really work through things. And we've talked about it. A lot of people are bullish this cattle market. It feels like it's going to take more. It's going to take plenty of combined events if we were to see a big bullish breakout. Otherwise, it just feels like we're slowly churning higher here in this cattle trade.
Yeah, and you go look at those deferred charts, it's exactly what we got, with the exception of, this little last pop here after the inventory report. We've been basically on a 45-degree angle since the lows in June. Looking at that April chart, grinding higher. So even if we did get some pullback in here, it's probably just going to go back to the trend line underneath this market and continue to climb, at least as long as the fundamentals are still there. Obviously, what's the biggest thing? We do have CPI data, inflation data coming out tomorrow, so that could be a bit of a mover. I know the stock market reacted on the other side of the coin today in terms of preparation for that report. But if those numbers come in heavy and the Fed needs to, again, get after those interest rates, or the fear of recession chatter talks up again, the first impact that's going to come into that cattle market will be that concern regarding the consumer and the consumer dollar. And as beef prices continue to climb versus cheaper pork and chicken, the beef market could get a little bit of a wet blanket put over top just because of that consumer demand concerns.
Now, I'm glad you brought up the inflation data. Do you feel like some of our commodity trade money flow we saw on Monday, were we maybe putting in a little risk premium ahead of that CPI data, John?
I think that's a distinct possibility in that regard. There's still a lot of chatter that inflation could kick back up as we get into the year, just on improved demand overall and just a lack of supplies that are out there. We've got the China reopening story is going to be closely watched in this window here as well. Obviously, if they're stepping in the market again, getting back to where they need to be in terms of being a consumer of the commodity space, that's just going to add some premium into the commodity markets in general. As much as we've been kind of negative on things overall in terms of competition and supply and lack of demand, that can change pretty quickly if all of a sudden, the Chinese were to step in looking for products that they've been kind of avoiding over the last year or so because of the COVID situations. That can be the driver in this market. You go look at the grain markets in general. We've thrown a lot of negative news at the corn market here. We're still trading 670, 680. So that kind of makes you wonder where things can go if we do get some positive bullet breakout type news, in that market in general. The Ukraine bushels, again, talking big picture here, are not coming back to capacity. So that's going to keep global supplies tight. You throw a weather event in here somewhere between us or South America in the next few months, and you got an issue that, again, where we could see prices be very, very volatile just because of where things are.
John, how about that dairy trade? Anything you're watching, milk, butter, cheese here this week?
Obviously the cheese market's a big key. It looks like maybe we found a bit of a bottom in that market, which has also kind of put a little bit of a bottom in the milk market here. We got a bit of a turn off that low in the March contract, held in about that 1740 area, a bit of a what we call a double bottom on the chart there. We'll have to see if that can dig in. I mean, it's been a slippery slope market pretty much all the way back to those highs, and kind of depressing to kind of see, but you want to see a classic downtrending market, look at what the milk charts look like. And the cheese market's been the driver. Is it just a struggle with the demand side, things of that nature? Now, we got through the Super Bowls, one of the biggest pizza weekends of the year, so maybe that's going to help fire up the cheese trade a little bit as we got some supplies to replenish. We'll see. But realistically, till those product markets kind of kick back in again, and that milk market just looks a little bit cautious right now. But at least technically, we found maybe a little bit of a bottom here on that March contract.
Well, I had chili and chicken wings for the Super Bowl, but I know a lot of people who had pizza, so we'll have to see if that helped out the cheese demand. John, before we wrap it up here today, any final thoughts, any risk management thoughts, anything else you want to share with us here today?
Yeah, no, hopefully you threw a little cheese in that chili, because that's usually what I do. But
I did.
from that standpoint, getting back to your question, again, great value out there. Still stay active. Again, I just gave a little bit of a bullish scenario, but at the same time, understand what the value is out there. Puts are cheap when it comes to the amount of damage that can be done if something falls apart and you have nothing in place. Or if you do those sales and you want to protect yourself, don't forget about that upside possibility. Sell the value, own the possibility is basically the way we look at it, and have some call strategies over top. Because again, a lot of things going on in this world that could trigger headline trade very, very quickly. We still overall have a thinly traded market, and that's some of the reason we have the volatility that's in there. If there's some reason that the market is triggered, whether it's to buy into corn, buy into beans, buy into cattle or hogs, we're going to see a strong price move just because of the lack of players that are still out there. But at the same time, across the board, we're looking at historical value with the exception of maybe the hog and the wheat markets. Just make sure you're protecting yourself here, so you don't wake up one of these days if a black swan event occurs, you're wondering where the prices went.
John, if folks want to reach out to you for some market advice there at Total Farm Marketing, how can they get a hold of you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. Again, don't forget about that website of ours, totalfarmmarketing.com. A lot of great information for producers out there. I just love talking markets with people. Feel free to pick up the phone, no obligation, just a call and ask a question or two and see what services we could offer you.
John, always a pleasure. Appreciate the time. Thanks so much. Have a great week, and we'll talk to you next week.
Sounds great. Have a good week.
John Heinberg with Total Farm Marketing. That's going to do it for Market Talk here today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.